afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. Markets slip in trade with both benchmark indices trading with cuts. Now Nifty hovers around the 10,400 level. The IT players weigh heavy and the PSU banking stocks extend support. Tata Consultancy Services slips over 5% after Tata Sons raised $1.38 billion by selling stake in company via multiple block deals made at the lower end of the price band, reports Bloomberg. HDFC will sell a little over more than 4% stake in HDFC Asset Management Company's IPO, which is expected in the month of June, says KK Mystery. Bank of India jumps most in over 5 months after the bank recovers 7,000 crores in the last 2 months.
Well, a bit of a pullback in the markets in the last few minutes of trade. So you'll see this gash, just that because the rise was not so strong. While this may appear steep, it's just about okay. We're returning back to levels that we kind of started off the trade with. Remember, at the start of the trading day, in and around these times, we were trading very, very flat. Went up a bit, and now a bit of a pullback. Let's come in. Let's get the advanced decline ratio and the heat map both. I mean, either comes first, doesn't matter. The advanced decline ratio, a bit of a convergence, but still pretty much in favor of the advances. So the broader market outperformance does continue. Just a bit of a pullback as a result of what's happened to the large caps as well. And now the heat map. And while TCS has stayed low, I think there is a bit of a correction that's come in stocks like Kotak Bank, which is down about 1.25%. HCL Tech is now giving company. Reliance is a little bit in the red as well. And the outperformance for some of the gainers continues. So there is no problem with the gaining side. HP, BP, IOC still trading well in the green. There aren't too many other stocks which have come off a little bit from the levels that they were trading at. So Sun Pharma, Wipro, etc. still trading okay. It's just a set of stocks which have pulled back a little bit, the likes of Reliance, Kotak Bank, etc., which are putting that little bit of added pressure on the index. TCS, of course, continues to grind lower and is the top loser today, down about 5%. As we said, the broader markets haven't really corrected too viciously, but even the correction on the index of the Nifty or the Sensex, just that pullback, nothing alarming really, just about par for the course, I would reckon. What about the liquid universe, Navneet?
Well, Neeraj, as you've already highlighted, the broader markets are still intact. It's the correction that one has seen in Nifty just in the last 5 to 10 minutes of trade. Remember, Nifty so far was trading above the mark of 20 DMA, and even it crossed the 50-day moving average in today's session. But as we speak now, it's just about hovering around its 20 DMA of 10,415, maybe below that of 4 to 5 points. Let's just pull up the futures. Throughout the session, the Nifty futures were actually trading at a premium of nearly 9 to 10 points. Let's see that premium is still intact. No, actually the premium has fallen to almost 3 points to 2 points. That's telling you maybe at these higher levels you could have seen some short positions being built in, but no major OI build-up has been seen for Nifty futures. Pull up the bank Nifty futures, which were getting support from the PSU banking space today. So that also shed, actually, I remember at one point of time the open interest for bank Nifty March futures were up nearly 4 to 5%. So it looks like there has been some unwinding which has taken place for the bank Nifty. And remember, bank Nifty today was outperforming. It was trading above its 200-day moving average. It's come off from those levels of 24,900 plus that we've seen today. And maybe as a result of that, we've seen the Nifty also dragging lower. And now Nifty is trading below the mark of 10,400. Quickly, I'm just going to take you through option strikes. 10,400 and 10,600 call strikes today have seen some unwinding. Remember, yesterday, the 10,600 call had seen some bit of writing. So unwinding comes in today. On the put side, the 10,400 put strike as of now has seen maximum addition of nearly 11 to 12 lakh share. Even a meager addition on the 10,500 put strike has been seen. Important to see actually what happens in the last hour of trade, because once again the trend seems to be changing. For majority of the session we were trading in the green, and just in the last 10 to 15 minutes that selling pressure has come about. Two stocks, HDIL, that's gained actually after 9 trading sessions. It snapped the losing streak in the last 9 trading sessions. We've seen some major losses for this counter. So that's trading with gains of 6%. The futures have seen some bit of long positions coming about. And the other one, the stock of the day, TCS, which has fallen after multiple block deals. And that's the reason is the promoter entity Tata Sons have sold 1.5% stake. If you look at the open interest, Neeraj, that's risen significantly, almost 57 to 58%. And I was looking at the options data as well. The 3,000 call strike today of TCS has seen huge amount of writing.
But I don't know, I'm just surprised that, or maybe I'm not surprised really, but I will be surprised if indeed, due to a technical reason that's come about, there will be sustained pressure on Tata Consultancy Services or no. By the way, as we speak now, the markets are slipping meaningfully, about 0.4%. So now the cut and the small pullback at those lows is getting sold into as well. So 134 point down for the Sensex, 30 for the Nifty. Remain in a slightly lackluster zone. Sunil Subramaniam, Chief Executive Officer at Sundaram Mutual Fund, joins us right now in our studios. Good having you, Mr. Subramaniam. Thanks so much for taking the time out. It's been a while that we've spoken to you.
Yes.
So good we're having this conversation. What's the sense? I mean, this seems to be a market wherein almost every small rally is getting sold into, and the dips are not being bought with as much ferocity as they used to be.
Fundamentally, DIs are responsible for this.
You're talking about the
Market not getting protected at the downside and fresh buying not happening. That is the reason is that post the budgetary announcement of dividend distribution tax, right? Almost every mutual fund in the market is trying to book profits to pay as large a dividend as possible to the investors who have reposed faith in it over the so many years. Right, because post April 1st, they'll have to deduct 10% DDT and then give it to the investors. So technically, the investors who have already invested in dividend option, as of 1st April, they will need to take a call whether they continue in the dividend option or they switch to the growth option. Right, that's a choice the investor will make. But for this year, he's already made a choice of being in dividend options. Now,
Is it taxable at the end of the...
No. It's
because I think
tax-free.
earlier the company used to deduct the tax, right? Or so far it was tax-free.
No, this is, you're talking about corporate dividends.
No, I'm talking about the mutual fund. So this is an absolutely new tax, which is
It's absolutely new
10%.
tax.
Okay.
There's a debt mutual fund and an equity mutual fund. In debt, what you said was true. There was already a DDT a few years ago announced by the government. The equity was tax-free at the source and at the recipient level.
Okay.
What the budget has done is to tax it at the source in distributing. So if a mutual fund is going to declare a dividend in April, he might as well declare that dividend in March, because he's going to put 10% more money in the hands of the investors. So naturally, we live on the investors' faith and trust, and it's incumbent upon us to repay that trust. So I think all mutual funds you will see are already announcing and will be announcing before 31st March a slew of dividend in the dividend options. The SEBI rule says you have to book cash profits to pay dividends. You can't declare dividends from NAV. So the appreciation cannot be used to pay. I have to actually sell it in the market and book a cash profit, then only I can pass on a dividend. So there is some real selling happening in the market just for this technical reason. Now, that's a selling not because of an alteration in the fundamentals of the stock market, not because of an alteration in the view on a particular stock. So what is happening is that they will sell it today and another mutual will pick up that stock, because mutual funds study common stocks, they know these are good stocks. So the reason you're selling is, and you have to sell that which you have made a profit. So if the stock on which you made a loss, you can't sell it because you're then going to have a cash loss.
Right.
So the profit, where the maximum profit has happened, there will be an industry move, because every fund house will want to pay dividends to sell these in, but there will be buyers of other, because flows into mutual funds continue to be strong. So there are buyers, but then the transitional impact will definitely be there in the stock market, and that's why DIs are not jumping in and buying at every FII sell. So that's why the cushioning which you saw earlier, which is what you started off by saying, is not there. So it's not any alteration of any fundamental economic or market view. It's just a tactical march.
It's a year-end phenomena. Can we expect stability in April?
Pardon?
Can we expect some stability?
Yeah,
in the
you should, because all this action will go away, and investors are not selling. Okay, this is only DIIs that I'm talking about, because investors have been grandfathered to 31st January, and thankfully we have ensured that 31st January still hasn't happened. So investors are not selling because they are not in a panic, because they are going to make a loss relative to 31st January. Doesn't make any sense. So that's not the thing. So April will definitely see stability, because otherwise the footprint, the inflation footprint, the IIP footprint, all of those are reasonably positive. There's no need for any panic in terms of that. So I would say April you will see, and the results for April will represent the full year results, which, given the footprint of the last quarter, I think a lot of consumption numbers have come out as expected. So I think to some extent there is no undue cause for worry as far as the market is concerned.
In your math, in the math of your fund house, Mr. Subramaniam, the earnings math, would PSU banks tend to disrupt what was otherwise starting to look like a fairly good story for FY18? And I know that while it may not last for FY19, this whole PSU bank earnings fiasco, we do have to admit that that pulls back the base, the EPS base for FY18 in a meaningful way, the kind of losses that will come because of PSU banks.
What you say is perfectly true. The only thing is, as a mutual fund, you go by your exposure to that sector, right?
Sure.
So we have not even 2% exposure to the PSU.
No, but
banks.
the index multiple as a result of
so
the
that will help us, no? Because when to the index, then the index gets dragged down, and I'm being compared to the index, and I don't carry the dragger of the index.
So
Yeah,
you will
sure.
It's good for me. So I'll get to benefit from that. So what I'm trying to say is, but there are fund houses which are heavy on PSU, which are better. So I'm just saying, so that to that extent, for me as a fund house, right, I've not overly been positive on the PSU space. So to the extent, when I look at the market, right, I'm looking at two ways, right? One, I need to outperform the benchmark, where this whole PSU drag is helping me. Second, I need to actually absolutely provide outperformance, where the earnings growth of the universe that I have is what I'm tracking, and there I'm healthy. So I think.
Okay, so far you said the exposure to PSU banking space is 2%, right? But considering the correction which has now taken place, which is pretty significant, do you see any investment opportunity?
Fools rush in where angels fear to tread. It's
Okay,
not,
so
it's early days. We are not ready to yet take a call.
yet.
See, I'll tell you, not because we are negative on the sector, okay? I'll tell you where I'm coming from. It's that who are the remaining players and how strong are they going to be will be known only in the next 6 to 9 months. Definitely, I can tell you one thing. We are not going to have this many PSU banks in March 2019. There's going to have to be mergers because government's recapitalization efforts. Merger is a very key part because you can recapitalize assets on merger. So hidden value in terms of land, real estate, building gets encashed out when you go through a merger process. So I expect the mergers to be on the government's agenda, because otherwise you have to pump in fresh cash for every one of these NPA erosions, right? So if you do a merger of a good bank and a not so good bank, the remaining sets of banks will be much healthier, but is it the right price to buy them? There is an outlook on the bank itself, there's an outlook on the price of the bank it's trading. So today the price is not able to reflect the real future of the bank. So I'm just staying away from the PSU bank, but I will definitely re-enter it at a time, because for India's economic growth, for the infrastructure potential's realization, PSU banks are a key. They are the blood stream of the economy, and without their support, corporate India cannot go and execute projects. So PSUs being part of the corporate banking space, I see a good future for them. The point is, as a stock market investor, what is the right time to invest? Not today, but sometime in the future I will definitely look at it.
You are, so that's one aspect which is about 35% of the index. Beyond that, I think if I just take a look at rate sensitives, since real estate won't feature in the scheme of things for funds, the other pocket left is autos.
Yes.
What's your view here? If they are an indication of where the economy is going, they are putting in the best foot forward. Jan and February have been fairly decent months as well. Do you think that momentum can sustain within this space?
Yeah, so two things on the momentum. There are three aspects to making money in the market on rate cyclicals, right? There's top line growth, there's EPS growth, there's PE re-rating, right? So what has happened is that this market has been already discounting the earnings growth of these companies. So the P's are already at fairly high levels. So they're unlikely to be a fresh PE re-rating story that happens. Now, top line growth, you're seeing it's strong. It will continue to be strong purely because rural India is going to get a lot of money from the government in various forms, through subsidies, through whatever, and that will find its way to purchases of vehicles, because the most visible statement of my arrival in life is a motorcycle, car, so be it. So it's a visible status symbol. So top line growth for all these companies will be good. The key comes to the middle one on the bottom line growth, because on the one hand, now rates I think have eased, and they're slightly beginning to rise. You're seeing banks starting to raise deposit rates. So the margins, how they play out, will be the interesting play to see, because when you talk auto, you're not just talking auto, you're talking the goes of financing the auto. It goes hand in hand. So when you take an exposure to auto, you take an exposure to retail financing, because auto loans are a significant portion, you can't divorce the two. So you have to take a view together with that as a sector. On the other hand, the rise in the sales of auto companies augurs well for another sector, which is a subsector of this, and this is not just because of this, because of another factor. This is the auto component sector. So any rise in top line is going to rise in the order book of auto components. So that's domestic order book growing strong. Same time, internationally, auto components is one of those industries where the export orientation, where you have global auto component suppliers based in India. So any revival in the global growth economy, which is, as you know, US is already leading the pack, Europe is slightly following, will lead to huge auto component support. So we expect the exports to boost up the auto component sector. So I would say that going forward, from a top line of auto companies to the top line of auto component companies, they are increasingly looking good place in terms of the recovery, because both the world and the domestic play will support them. So that's the way.
Let's talk about a space which has been a laggard so far this year, but if I look at 2017, it's been performing well, and I'm talking about the metal stocks. One reason obviously is the imposition of the US import tariff. But keeping that aside, do you think that the outperformance that one saw in last 1 or 2 years may continue, or has the commodity cycle bottomed out?
Tough question, because I think mutual funds got it wrong with metals.
Okay.
Okay. So if you see, most mutual funds were light on metals, and a significant portion of mutual funds have underperformed has been due to the call on metals. Okay. Because I think, and we haven't changed our call on that yet. We are still underweight on commodity and then metals, except for the exception of steel. Steel we see as a domestic infrastructure play, and so we see that we are bullish on steel. But the rest of the metals pack, purely from a momentum perspective, we continue to be underweight. Now, time will tell whether again we are going to be proved wrong this year or not as an industry. I think that's been a view. That being said, internationally, the metals pack is viewed as a cyclical.
Correct.
Right. So with the US economy recovering, if US infrastructure is going to get a boom, you will see demand for commodities, like what happened with China with the Olympics and everything leading to the commodity rally. If US growth comes in super strong, then yes, then there's a real demand for the metal pack. Then you have commodity rich the countries which will benefit from that big. So South Africa, mining, right? Many countries in Africa. So I think it's an interesting play. Last year we didn't read the momentum play in metals, right? The industry. This year, momentum play we are still negative, but I think the interesting story to watch is in US the recovery. If it's more of an infrastructure story, then definitely there will be demand for commodities and metals. So that's the thing we'd like to track and watch as we then. If that's a strong footprint, then we could see us changing track on the metals part.
Okay. Last question, Mr. Subramaniam. There are two ways to be contrarian, right? One is to buy things that people are shunning. The second is to shun things that people are very bullish about.
Correct.
I think buying things that people are shunning is difficult in these times. Very few pockets that people are very, very negative about right now, except one or two which are obvious and small sized in nature. Would you, therefore, if not as a fund house, then in your personal opinion as well, be anti-consensus with the street on right now?
Okay, personal view is one, industry, the company's view is one. The problem with the second view, with the company view today, is the flow of money that's coming in from investors. So I have to deploy it. So for me to shun a sector which is popular is challenging, because then I'm sitting cash.
No, you might choose to invest in some other space and not in that.
I'm coming to that. The second is that we are now tracked against benchmark, right? So if that benchmark is rising, I may be negative that, but I can't be zero that, because then I am constantly, every day report card comes out in NAV, right? So I can't afford to be. So even if you say, I come out and say I'm underweight this sector, it doesn't mean I'm zero. Sure. It means that I'm just, benchmark has 22, I'll be at 18. So the ability for anybody and a mutual fund, see an individual PMS stock picker is different. He can take absolute contra calls. Mutual fund can't, because you have a benchmark, and the benchmark has the necessary allocation to every sector.
So where are you underweight on? I understand your compulsion.
Yeah, I'm underweight pharma.
You are underweight pharma.
I'm underweight metals.
You are underweight metals as well?
Yes.
Okay.
These two are the ones that I'm underweight.
Wow. Okay, you're not going out and buying pharma despite the falls. Okay.
One or two funds which I launched as 4-year, 5-year closed-ended funds, I did pick a few things. But that's only for those funds, smallish exposure, where I know that for 4 years I'm not in trouble. But open-ended funds, no.
Yeah, well,
And PSU banks. That's the third.
That's the third one. Yeah, that well, we got an answer from you there. I think they're one of their funds. We did this on the mutual fund show. I'm forgetting the name of the fund, but since inception, I think 18, 19 years history.
Yeah.
Smile, if I'm not wrong, or
Mid-cap, select mid-cap.
Select mid-cap fund. It's had a CAGR
29,
which has just been exceptional.
29% per annum
29%.
for 15 years.
Yeah, it's just exceptional, and this is despite a fund probably seeing 3 or 4 different fund managers as
Absolutely.
well, right? Yeah,
Yes.
it's just been exceptional. Great. Anyways, no need any last questions.
I just have one more question. IT? What's the
IT, we are neutral.
Neutral.
We were underweight. We have moved to neutral. We are increasingly, we will come positive. But 2 clarifications. One is small and mid-cap IT versus large cap. We are more bullish on the small and mid-cap IT space, purely because more nimble, artificial intelligence, cloud, all those kind of things are not a traditional business model, right? So that's the
Okay,
problem.
Sunil, we'll leave it at that. But
Good,
appreciate
right,
you coming to the studio and giving us your views on the markets.
Thank you so much.
Okay, markets are, they have recovered a bit because the Nifty is back above the 10,400 mark and Bank Nifty is just about in the green with gains of 9 points. But let's talk about a stock which is in focus today, and I'm talking about Man Infra, which is trading with a good amount of gains, and the stock is currently trading with gains of nearly 2.5 to 3%. The company has actually received an order worth 221 crore rupees from Pimpri Chinchwad Municipal Corporation under the Pradhan Mantri Awas Yojana. Let's discuss this in further detail with the managing director of the company. Joining us now on the show is Mr. Parag Shah. Hi, Mr. Shah. Good afternoon to you. Thanks a lot for joining us and congratulations on this order win.
Good afternoon, madam.
Could you give us more details about the order that you won? Where does this take your order book to? What are the kind of margins that you're looking to garner from this order?
We had the order book on 31st December around 550 crore rupees. And this new order is a 220 crore rupees. So the total order book is around 770 crore rupees on the EPC side. We are a EPC contractor also, and we are a real estate developer also. So the EPC orders from outside clients is around 770 crore rupees. And our in-house projects, what we are having in hand, which is somewhere around 5 million square feet, which is nearing to starting the work now.
Okay, and how is the real estate order book looking like?
Out of this 770 crore rupees, 220 crore is a new order from Pimpri Municipal Corporation. Around 200 crore rupees is from the port sector. And the balance is from the real estate developer.
Okay. Mr. Shah, one theme which we keep, asking all the real estate players in the country now, the affordable housing, there's a lot of thrust into it. Have you forayed into it, or are there any plans to foray into affordable housing?
We are doing somewhere around 3.8 million square feet
Okay.
at Daisar, which we are planning to launch by somewhere around 15th of April, which is an affordable housing. The houses are below 1 crore rupees.
Below 1 crore rupees.
Yeah.
Okay, and the project will be formally launched, as you said, in the month of April, right?
We are expecting the final approval, so maybe within a month's time we should be able to start the work.
So you'll be launching the project. The work is already started, or the work will start in the month of April?
No, work will start.
The work will start.
We have not launched the project also.
Okay,
we'll
so
launch the project once we'll start the work.
Okay, 1 crore, as you said, will be the average ticket size of that affordable housing project. What's the margin that you're looking from the affordable housing? And if I compare it to your regular margins which you get from the other projects, if you can give us a comparison of that?
Since this affordable housing, around 10 to 12% is a profit in the EPC contracting business. In the developer side, we can't say off the hand, because in the real estate, it's a market driven. But this EPC contracts, yes, we have been able to maintain around 10 to 12% profit since last many years.
Okay, before I let you go, just one last question. What's the debt on the books right now, and what's the repayment schedule looking like?
See, on a parent company, on a Man Infra, it's a debt-free company.
Okay.
And we are sitting on a liquidity of 150 crore rupees plus. We have certain loans in a subsidy company because of the different partners in the subsidy company. So, which is somewhere around 300 crore rupees total.
300 crore. All right, Mr. Shah, we'll leave it at that note. Appreciate you joining us today and taking us through the details of that new order win. Well, that was the management of Man Infra, which highlighted the order book has now been, the total order book now actually stands at 770 crore. And the reason why the stock's been trading in the positive territory is after that order win, which we just spoke to the management. And most of the companies, Neeraj, are actually foraying into affordable housing, but I think the work has still not started. So I think it's still going to take a lot of time to see how the response is to define affordable housing. Maybe in Mumbai, 1 crore could be a right figure, but as and when you go to the other areas, it could be between 40 to 50 lakhs. And companies like Man Infra, which usually do margins of 25 to 30%, or let's say Suntech, which recently announced, it'll actually take their blended margins lower.
Yeah, it should, but maybe the top line growth just helps in
And plus the
boosting.
benefit of foraying into affordable housing, the funding is cheaper compared to the other projects.
Interesting to see what happens to these companies as during the course of the next few quarters, to be honest. Okay, the equity markets just about lying low, 11 points down for the Nifty Bank about 27 points odd higher. So is virtually lackluster moves in the last 40 odd minutes or 30 odd minutes of trade. Some individual stocks could be doing okay. As we said, OMCs have been having a pretty good day. At the broader end of the spectrum, I think Future Consumer, amongst other companies, is doing rather well for itself. So that stock continues to rise and shine. Is the best performing stock on the Nifty 500, up about 17%. JP Power is the other one, up about 12%. And then a clutch of names, Avanti Feeds. Actually, Avanti Feeds, Waterbase, and this entire set of stocks have moved up in the session today. The fear about what will happen because of that duty that the US has spoken about, the preliminary duty, I might rephrase myself, seems to have gone off. So no problems out there when it comes to those companies individually, at least. Amongst others, stocks like Indoco Remedies, which is up about 6% and JM Financial today is bouncing back about 6% higher in trade. So good going for this stock too. NBCC, Navneet, interestingly, has bounced back. It didn't correct too much when this question about the management came in. But now that the chairman has gotten a clean chit, there's a sharp 5% reaction.
Yep, NBCC has been doing well today. I just want to pull up PC Jewelers as well. That's also gone up in the last maybe half an hour or so, but it's come off its day's high, but still holding on to gains of nearly 7%. And we highlighted HDIL at the start of the show. That counter has also come off day's high. At one point of time, it was up nearly 10%, and now it is just trading with gains of 5 to 6% as we speak. Future Consumer is one stock which Neeraj has highlighted, but I just want to highlight the other Future Group companies. You've got Future Market Networks, that's locked in upper circuit with gains of 20% as we speak. The Future Enterprises, DVR and Future Enterprises, both these stocks have seen gains of nearly 13 to 14%. And interestingly, Jindal World, this counter was up 7% yesterday, and today it's up another 20%, and it's locked in upper circuit as we speak. So Jindal Worldwide, 776, and Star Paper from the paper pack has seen gains of 8% right now. So Star Paper will just come up on your screen. Yep, 7 or 8% gains seen in the last half an hour of trade.
Interesting. Let's get in our experts on board now for 2:30, that time of the show, wherein we should get in our technical experts first and then get in a fundamental voice as well. But start off with the technicals. Rahul, Randeria as well as Amar Singh join in with their sense of the charts and the outlook. Gentlemen, both of you, good afternoon. Thanks so much for joining in. Rahul, let's start off with you. A bit of a pullback in the markets in the last few minutes. Not that the day was very buoyant, but we are doing much better than what we were doing at the start of the trading day. How are you approaching trade on the indices now, both the Nifty and the Nifty Bank?
Yeah, good afternoon, Neeraj. If you look at the overall monthly chart, we have seen a 9% correction from the levels of 11,171. It made a bottom around 10,141, which was a 200-day moving average. Last 3 days, we have seen a significant rally from the levels of 10,141, and today's high was a significant one in the last couple of days. So definitely there was some sort of profit booking seen in the second half. But looking at the overall setup, I feel that again the momentum is still strong, and Nifty can inch back to the levels of 10,555, which is an island reversal gap area on the Nifty spot levels. So any correction, maybe 30-40 points should be used as a buying opportunity, and one should place a stop loss below maybe 10,350 for a positional target of 10,555 on the upside.
What about your individual stock ideas?
Yeah, I have two buy calls. First is a buy in Jain Irrigation, and traders can buy at current levels and on dips to 102. The stop loss stop loss will be 102 and target will be 122 for short to medium term. My second buy call is in Titan. Traders can buy at current levels and on intraday corrections to 837. Short to medium term positional target would be 885 with a stop loss of 829 on the downside.
Amar Singh, how are you approaching trade today on the benchmark indices? Couple that up, of course, with your stock specific ideas as well.
Yeah, overall, looking at the benchmark indices, what we are seeing is that Nifty witnessed profit booking, because if you look at the gains which have happened in the last 3-4 trading sessions, from almost 10,140, it's gone up to as high as 10,470. So that's roughly a 4% sort of up move that has happened. But if we look at it, the charts on a weekly basis, what we are seeing is that it met with very strong resistance on the weekly charts, and from there only it collapsed. Because if you look at the 10-period exponential moving average on the weekly charts, that was somewhere around 10,478. And the high was 10,471. So clearly reflecting that this profit booking was bound to happen, and also those who wanted to go short, that was the level wherein they would have gone, because till Nifty consistently does not trade above 10,530, 550 zone, there would be selling pressure in the market. But yes, what has happened is that if you look at Nifty on the short-term charts, there is bullish divergence on the charts, and also now the 10,140 low that was made, that should act as the short-term support. So I would say that it's going to be choppy trading sessions, and the range which I see in Nifty is on the downside 10,100 to 150 on the downside. That should act as a major short-term bottom, whereas on the upside, till the time 10,550 is not taken out, I would say that it's going to trade range bound. If one wishes to trade in Nifty, then any pullback towards 10,330, 350, that can be a buying opportunity with a stop loss below 10,270. And a target somewhere in the region of 10,450, 60. And so that would be the trade that I would recommend, because at this level I would not recommend a short trade.
Okay, and what about the individual stocks, Amar?
Yeah, there are two stocks that I would like to talk about. One is Havells India. Havells, overall the long-term trend for this stock remains positive. Technically speaking, even on the short term, it has witnessed a breakout. So any pullback towards 510 can be used as a buying opportunity with a stop loss of 499 and a target of 534. And the second stock that I would talk about is Titan. Overall, Titan, if you look at it technically on the charts, it's on the long term as well as the short term trends are positive. And the stock has breached its key resistance zone of 840, 845. If you look at it, it was consolidating and it was unable to breach that level. So that level has been taken out. So any pullback towards 830, 835, that can be a very good buying opportunity in Titan with a stop loss of 800 and a target of 890 on the upside.
Okay, and Titan is a consensus buy call, remember, coming in from both Rahul as well as Amar for the day. I just highlighted Star Paper, but looks like the entire pack is up and about. So West Coast Paper has also seen gains of nearly 4%. You've got Sesha Sai Paper, Tamil Nadu Newsprint, and as well as JK Paper. All of them have seen gains coming in the last half an hour or 45 minutes of trade. Sesha Sai Paper and Tamil Nadu Newsprint is also trading with gains. But Rahul, after I don't know how many trading sessions, finally a gain seen for a stock like PC Jewelers, which so far was languishing. It's gained nearly 7 to 8% in today's session. How are the charts looking, and at what levels can one take a fresh position here?
See, whenever the behavior of the price, whenever there is a panic selling into any of the stock or any trading asset, the price, until unless it doesn't make any base, we would not be able to see a decisive trend. And after a carnage in PC Jewelers, the stock has managed to see the intensity getting lowered down, and today, after maybe 2.5 weeks of consolidation, it has given an uptick, strongly holding the grounds with 7% appreciation. So definitely the volatility has narrowed down, and we could see a decent upside from the current levels. Any pullback, maybe 2-3% today or tomorrow, should be used to buy with a stop loss below 334 on the downside, and upside again stock can retest the levels of 390 it would be a highly volatile trade because the stock has been seen volatility the last couple of weeks. So definitely that could come in, but definitely any correction should be used to buy.
Okay, let's get in a fundamental voice on the show as well. Nipun Mehta, market expert, joins us right now on the show. Nipun, good afternoon. Many thanks for joining in. Today and the last 1 hour of yesterday, Nipun, seems to be punctuated by some bit of a rebound in the most beaten down pocket over the last 3 months, and that's PSU banks. There is a meaningful rebound, we can't deny that. The question mark only is this a bit of a hope trade from select quarters of the trading community, or do you believe there could be some serious bottom fishing that could have been done in select banking names, particularly the large ones?
Well, good afternoon, Neeraj. I think as far as PSU banks are concerned, there's a bit of both. There has been obviously some amount of short covering. It was the entire space is relatively oversold. There are a few pockets of institutional holders. During this fall, they haven't sold. But at the same time, given the kind of relatively attractive valuations that are there for PSU banks, there could have been some amount of institutional buying that is there. Having said that, I think this kind of a bounce is unlikely to sustain for a long period of time. One doubts whether there's likely to be sustained institutional buying coming in as far as these PSU banks are concerned. Yes, valuations, like I said, relative to private sector banks or NBFCs are attractive. But given the kind of uncertainty that continues in terms of whether there could be more skeletons that could fall out, more provisioning that could be required, I think you're unlikely to see a significant jump as far as PSU banks are concerned. So one needs to be cautious of these kind of turnarounds that are there. They might not sustain for a very long period of time.
Nipun, what you're suggesting is then the overall the strength which comes back into the market is getting sold into. If I look at the macros, the recent macro data, the CPI as well as the IIP numbers clearly outperform what the street estimates were throwing about. According to you, tell us, are the fundamentals in place, or is it some phenomena which is playing out on back of the volatility that one has seen for both domestic as well as the global markets?
So if you leave the PSU banks space aside, which obviously is a relatively weak space that is there, I think when one looks at the macros, when one looks at the data that's been coming in, it's been positive. If you look at the IIP numbers, the growth has been fairly encouraging. Inflation has been falling or hasn't really gone up above RBI estimates. It's relatively low key in terms of several inflation parameters that are there. In terms of growth, you're seeing consumer durables, you're seeing commercial vehicles, you see manufacturing grow at a relatively encouraging pace. Services PMI to a degree has been weaker, but given the kind of IIP numbers that we saw, I think it's gradually becoming obvious that the March quarter results also could be good on the back of the December quarter results that were also fairly positive. The management commentary was positive, and our sense is that the March quarter results for a lot of the manufacturing companies, consumer durable companies, would be positive. Commercial vehicles, for that matter, expected to be good. So you're seeing positive macros or positive data coming in. There are headwinds in the form of higher fiscal deficit, global headwinds that are there, gradual increase in crude price, rising interest rates as far as not just US, but gradually expected to rise as far as Europe is concerned. So a lot of those headwinds could be there in terms of domestic markets. A lot of the other emerging markets doing well also to a degree could be headwinds as far as inflows into India is concerned. But when one looks at pure correlation with earnings as well as the macro data that's coming in, I think it's fairly obvious that you're likely to see a decent ending as far as FY18 is concerned in terms of earnings. FY19 start could be good again in terms of the infrastructure spend is concerned, infrastructure growth is concerned. So these are some of the sectors which have shown growth as far as the IIP numbers are concerned and are expected to show continued growth even in subsequent months, subsequent quarters. And which would mean that clearly wherever companies which have been performing well, not just for the December quarter, but for some time now, and there are several pockets in that, are likely to attract a lot more investor attention as opposed to that laggard of the PSU bank space, which probably is attractive in terms of valuation, but has a lot of uncertainty. So a lot of pockets out there which within the mid-cap space, within the large-cap space, attracting a fair amount of attention, expecting to see a reasonable amount of credit growth coming in. The cap goods space also showing some amount of traction, not at the pace one expects, but at least some pace seems to have picked up. So we continue to be positive on the markets, continue to be positive on a lot of these spaces very selectively where there is the top line growth and profitability growth that is expected to be seen for the next few quarters as well.
Nipun, what do you make of this event in TCS, Tata Sons selling off that some part of that stake? I think they upsized the stake plans a bit, planning to sell about 1.24, eventually went it up to 1.3 or 1.48%. They have said that they are going to use that money to pay some debt and make some cross holdings and otherwise, etc., etc. But what do you make of this event, and what's the view on large cap IT by and large?
Well, one did feel that the price was in a way fairly attractive for the buyer. It's just likely that Tata Sons could potentially have got a marginally higher price out of the sale. I think this kind of a sale is something which any holding company, in order to ensure that. So there's been a fair amount of restructuring, if you observe, for the entire group that's been going on. There's been a lot of dividend payouts that's been happening, buybacks to a degree wherever there was cash surplus that was there, sell-offs in terms of funding cross holdings and a lot of that. So this is something which our senses is normal as far as such a large group is concerned in terms of asset sale or share sale that is there. If one looks at the IT space, like I've said earlier in your shows as well, our sense is that turnaround has happened. As far as large cap IT is concerned, the mid cap IT selectively was doing well in any case. The large cap IT seems to have outgrown the visa issues, realigned their businesses, looked more closely at the product profile out there where there is an opportunity. Probably the pace of growth could have been far higher in comparison to what we are seeing in some of the other global companies. But our sense is that very clearly that turnaround has happened, and while you might not see that mid-teen growth that could be there as far as large cap IT is concerned, our sense is at least that double-digit growth is something that you are likely to see. So if you look at the next few years, we'd be positive on the IT space, whether it's large cap or selective mid cap that is out there.
Amar, any thoughts on TCS as a trade? It's down about 6% now, trading at the lowest point of the day. Would you initiate fresh trades on TCS?
Yeah, looking at TCS, what we are seeing is that TCS has taken out its major crucial support level of 2900, and it's trading below that. And technically looking on the charts, the long-term trend definitely remains positive and strong. There's no doubt about it. But the short-term as well as the intermediate-term trend clearly reflects that is on the intermediate trend I would start with is more or less is waning off, and the short-term trend now seems to have turned negative. So I would say that any pullback can be used as a shorting opportunity. So say in the region of somewhere around 2950 odd or so, that can be a selling opportunity in TCS, because till the time it trades below 2900, there's going to be selling pressure. But yes, on the downside, it's going to meet with support somewhere around 2800. So it's going to trade in a range 2800 to 3000. That's going to be the range for TCS in the short term, because 2800 technically is a very strong support level for TCS.
Okay. Stay on, gentlemen. So much more to talk about, but we have to talk about what is arguably the stock of the day, and that has to be Future Consumer. It's trading with strong gains after Motilal Oswal came out with a note. today, or rather overnight, talking about how their target prices are substantially higher than what the current market price was then, and for a reason. Yash Upadhyay joins us with more details about, one, the Motilal Oswal note and the details thereof, but two, also of some of the other brokerages that in the recent past have come out with some updates or some recommendations on future consumer, right, Yash?
Exactly, Neeraj. So like you said, Future Group has to, Future Consumer has to be the top stock for today. And in fact, if you can get the chart over here, it has snapped its 10 days losing streak today and has rallied, as you can see, has snapped its 10-day losing streak and has rallied as much as 18% today on the back of that Motilal Oswal report. Now, in that report, they have initiated coverage on the stock and have set a target price of 76 rupees, indicating an upside potential of over 50% from its previous day's close. And now they believe that Future Consumer is the best placed amongst all of the Future Group companies on the back of huge window of opportunity for brands using modern retail as a form of distribution network. The company is expected to see a significant improvement in its margins on the back of improving product mix and operating leverage. Also, it is likely to turn profitable by FY19, and also the company is growing rapidly via its distribution network and portfolio expansion. In the same note, they also expect the company's revenue and EBITDA to grow at a compounded annual growth rate of 39% and 147% respectively over FY17 to of FY22. Also, they believe that it is an attractive opportunity for investors looking to invest in the company for a time period of about 3 years. But that is that for Motilal Oswal. As Neeraj was mentioning, Morgan Stanley and UBS too had initiated coverage on the stock. UBS had initiated back in January 29th, and Morgan Stanley had also initiated on December 7th. Both of them having a buy rating on the stock. UBS having a target price of 85 rupees and Morgan Stanley having a target price of 95 rupees. So what is it that's making these brokerage houses bullish on this particular counter? So a couple of key points that I've noticed is that they believe that Future Consumer is likely to be the key beneficiary of the growth in the Indian consumer sector. They believe that Future Consumer has a well-established brand, and its operating margins are likely to improve on the back of efficiency of scale and improving product mix. Also, their consistent effort in expanding its distribution network and focus on profitability are the key factors behind these calls.
Thanks.
No, did you see I'm just wondering, thanks Yash for that. The first chart that Yash pulled out, which shows that FCL tends to react extensively when a large brokerage comes out with a note, right? I think the first chart will come up on your screen, and there were some 2 bars. One bar was, of course, what happened today, and the one bar was when Morgan Stanley, the note had come out. I think that probably would have been the case. So 2 big bars for Future Consumer, and both have happened in or around when brokerages gave the target prices. Since then, of course, but we would have to say that ever since Morgan Stanley came out with the note or otherwise, the stock has only gone down and corrected all the way to 50 rupees. Now seeing some bit of an uptick today.
That's right. In fact, that was the time when the stock also touched its 52-week high, but it's come off significantly. Though the recovery is there, but on YTD basis, the stock's seen cuts of nearly 20-22%. Rahul, on the charts with today's uptick on the counter, can there be a fresh buy at these levels?
Yeah, Navneet, if you look at the overall chart from December 2016, the stock has tendency to move very sharply. It corrects very sharply, and we have seen a V-shaped recovery. 4 times it has happened, and currently also if we look at, the stock has corrected from the levels of 80 rupees. Yesterday it made a low of just around 50. So again, if we look at the history, and if we want to just forecast or predict the future price movement, if we at least anticipate a V-shaped recovery, the stock has potential to test the levels of 80 rupees in next maybe 6 to 8 months. But what we have seen in the past from December 2016, the V-shaped recovery, the depth of that particular V-shaped recovery has that particular length has been the height from the breakout point has been a target. So if we look out the longer term target of next 2 to 3 years, if we add on 30 rupees, 80 rupees minus 50 rupees, 30 rupees, add that 30 rupees to 80 rupees, that comes to 110. So next 2 to 2.5 years, I feel that stock has potential to test those levels of 110. So a patience investor can definitely accumulate at current levels. From investment point of view, one can place a stop loss below 40 rupees, and one can accumulate slowly and gradually from the current levels and on corrections.
Okay, that's the view on future consumer. The other stock I want to pull up is Shree Cement. That's gone up nearly 4% in today's trade at a time when markets are actually turning pretty weak. Shree Cement is at day's high with gains of over 4%. Nipun, anything in the cement space that looks attractive, but any specific stock or overall view on the sector?
Well, cement as a space has been, to a degree, showing promise since the last 2 or 3 years, since the time we've seen a fair amount of infrastructure spend coming in from the government. However, if you look at the results over the last few quarters, very clearly the top line growth which had been anticipated hasn't really happened. Having said that, I think over the next few quarters, if you look at it from a 2 to 3 year point of view, this is again one space which is expected to very clearly benefit out of the whether it is the housing spend that is there or the infrastructure spend that is there from the private sector or from, by the government. What's probably lacking is pricing power that hasn't still come by, simply because of the fact that there are certain regions where there is increased or higher activity, and you're seeing increased sales in certain regions while there's still a fair amount of absence of that pricing power that hasn't really come by. Also, when one looks at fuel costs, the issues that some of these companies faced as far as petcoke is concerned, is something which is ensuring that the kind of operating margins that some of these companies can have or have seen in the past haven't really been seen till date. Also, the capacity utilization for a lot of them hasn't reached peak capacity. So given the kind of spend, again, like I said, that's expected both out of the government and the private sector, whether it is from infrastructure or affordable housing, one is expected to see further traction in terms of sales happening. There is stability as far as raw material pricing is concerned now. So that's something that could help in terms of margins. Some amount of higher pricing power is something that could help, again, in terms of margins. So we are positive as far as the entire cement space is concerned. Some of these larger companies which have seen or which have undergone or which have acquired capacities, there's been consolidation as far as the space is concerned. And that consolidation of or addition of capacity for some of these larger companies is for sure expected to help in terms of the pricing power that could come by. So positive on the cement space if one looks at it from a 2 to 3 year standpoint.
That looks interesting. Shree Cement though has had a big trading move today. Sanghi, I think, had a move yesterday. ACC had shot up in the last few minutes of trade yesterday as well. Amar Singh, actually Sanghi is up today as well. Amar Singh, any trades here in the cement pack? They seem to be fairly active, sporadic moves for each of these, but every day you have a stock which is looking like a winner.
Yeah, overall what we are seeing in the cement stocks is that there is, after the sharp correction, there is consolidation, and it seems that the cement stocks are trying to form a bottom, be it the ACC, be it Ultratech, be it Shree Cement, be it Ambuja Cement, because from the long-term perspective, they are around key support levels. And even on the weekly charts, it's close to, on the oversold territory. On the daily charts, we are witnessing some bullish divergence. So clearly, it reflects that these could be levels wherein one could expect some bounce back. So Ambuja Cement is a stock, is one can look at. Overall trend remains overall down, but since it is in oversold territory across different time frames, so there could be a pullback. So any pullback towards 234 can be a buying opportunity with a stop loss below 230 and targeting 244 to 245 on the upside.
Okay, ACC Ambuja also in focus after the news came in last evening about the master supply agreement that the companies have signed. But let's move on. The Nifty PSU banking index has dropped more than 15% since the 12,700 crore PNB fraud came to light. So is this the sharpest fall ever for the index? And if not, how has it panned out in the past? Shraddha Babla joins us with that answer. Shraddha, over to you.
Well, the recent bank frauds that have come to light, the rising bond yields and the associated M2M treasury losses, especially for PSU banks, which are large holders of those bonds, and also RBI's revised framework on stress assets, which is expected to accelerate provisioning, is actually all of these factors are what is contributing to further pressure or earnings pressure as far as PSU banks are concerned, and that has further dented sentiment for the PSU banks. So not surprisingly, so far this year in 2018, the Nifty PSU Bank Index has corrected by about 21%. But now let's look at what happened when we saw the last 3 big corrections in that banking index. Now, each time there was a big rally, the index has actually fallen by about or more than 50% from its peak. So here, if you see, the index had corrected by 54%. Here, if you see, the index had corrected by 60%. And then you have a correction of 52% again in 2015. So as far as the current ongoing correction is concerned, the Nifty PSU Bank Index has fallen by about 24%. So the question really is whether the PSU Bank Index will follow this historical trend, or will we actually see some reversal on account of the lower valuation? And that's today's chart of the day.
All right, Shraddha, thanks for bringing in all those details. But as we speak, Nifty is back into the green, trading around the levels of 10,433, and Bank Nifty is trading now with gains of nearly 165 points. So that's back above the 200-day moving average for the day. There has been some buying at lower levels which has emerged for these indices. Well, it's time for us to slip into a short break here and count down. But on the other side, we get you the Fab 4 stocks of the day. At 3:15 p.m., we also get you what the dealing rooms are recommending and some closing strategies from our technical experts. Stay tuned.
Life's so lovely, live life happily. Oh, plan your life the way you want it to be.
LIC's new endowment plan offers a combination of protection and savings.
Invest to save and get insurance. Bring home eternal happiness.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution है. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई, हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
On 26 November 1949, the Constitution of India was adopted, recognizing liberty, equality, and fraternity as the principles of life, which cannot be separated from each other. The government of Karnataka has imbibed the ethos of the Constitution by developing programs and policies aimed at creating a socially, economically, and politically just society. Karnataka's flagship programs such as Maitri, Annabhagya, and Arivu have created an equal opportunity platform for all, irrespective of their gender, economic, or social status. Karnataka is committed to encourage education through various welfare initiatives, ensuring equal status for women and empowering minorities to uphold every individual's dignity. In the last 4 years, Karnataka has formed 462 new Gram Panchayats, which has taken the principles of democracy to the grassroots levels, and our Progressive Vision 2025 document engages public government participation to build a better state for all. Karnataka's collective vision to endorse fraternity, justice, and equality has transformed into Karnataka's model of development, which is based on the tenets of the Constitution.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
Okay, back with countdown right here on Bloomberg Quint. The market is bobbing between the red and the green. The Nifty is marginally in the green right now. Sensex marginally in the red. The Nifty Bank continue to do well, up about 0.5%. Arguably, future consumer has to be that stock of the day. That one is now up 17.7%, 59.2, trading very close to or at the highest point of the day. And then giving company are some of the PSU banks. BOB has had a 7.5% rally. When was the last time you saw BOB do that? It's a strong move that has come into BOB. Some of the other banking stocks too have had a good move, but Bank of Baroda in particular, a fabulous move that has come into the stock in the session today. I'm just trying to dig out that data, or when was it that the last time BOB had such a move. This is the biggest move since October 25th, 2017, which was, of course, a very large move of 31%. Anyways, I don't know if that's finding its way to Nikki's list of the Fab 4 stocks or no, but Nikki, what do you have on the Fab 4 list today?
Hi Neeraj. First one that we're tracking is NDCC. There we've seen an uptick of as much as 6.4%, highest levels since as much as November 7th, 2017. This is after no charges were proved against the chairman, Mr. Mittal, after CBI probe. Now the case relates to Pragati Maidan redevelopment case. Next in the list we have Avanti Feeds. No surprises there. Well, the company, this is after the executive director of Apex clarified to BQ that the US duties on Indian shrimp producers will not have any significant impact on the financial of the producers of the country. Third in the list, we have Andhra Bank. Well, the entire PSU bank, the entire cluster is up, but then Andhra Bank stands out. It's after the clarification that it made that it has only exposure of nearly 1,147 crore to Sterling Group against the one which was reported at 5,000 crore, which was further divided into fund and non-fund. And it also said that this was back, the bank had actually recognized this as an NPA back in March 2015. Well, last in the list we have HDIL. Finally, some relief coming in for the counter after 9 consecutive sessions of losing streak for this counter. The stock has finally seen some kind of recovery, but then do bear in mind the fact that 9 long day losing streak was almost the longest that we've seen since November 23rd, 2011. Back to you guys.
Thanks a lot. Since the demon lows, I think HDR is the only real estate company which is under the water from those levels. From that point onwards until now, it's a significant pullback for HDR as well. Nipun, before we thank you, with a clutch of ideas, themes, stocks available at much better valuations than what they were a few days ago, and arguably the mid caps have corrected a lot more than the large caps. Where is it that you would put the largest money to work, if not now, then on a correction? Because one thing is to avoid pockets which are not favorable. The other is to keep in mind pockets which could become very, very favorable, if not now, then when the market corrects a bit. If there is one pocket that would be your favorite.
Well, there would be several pockets that could be favorites, but one theme or one pocket, one would continue to be fairly bullish on, if you look at it both from a short, medium or longer term point of view, is the consumer durable space. I think the kind of traction that one has seen over the last year or two is something that's expected to continue going ahead as well. You're seeing increased buying power. You're seeing rural spending that's happening. You're seeing also a fair amount of urban spending that's happening within this consumer durable space. The NBFC space has been lending relatively aggressively against a lot of these consumer durables, offering EMIs even for virtually every single white goods that is available out there. So clearly, that is increasing. That kind of funding is increasing buying power as far as the middle class is concerned, as far as the mass affluent is concerned, and that's something that's getting reflected in higher volumes for most of these consumer durable companies. Margins are sustaining. Of course, most of these companies, or a lot of these companies being MNCs, or even for that matter, domestic companies, are the valuations have been relatively high. But in this kind of a dip, whenever there is irrational fall that is there, our sense is this consumer durables space is something that should fetch reasonable appreciation and attract a fair amount of continued institutional interest over the next couple of years.
All right, Nipun, we'll leave it at that note. Appreciate you joining us today and taking us through your thoughts on the markets. And as we speak, Nifty is back into the green, 10,440 thereabouts. The bank Nifty is trading with gains of nearly 150 to 160 points. One pocket which has remained strong throughout the session today are the oil marketing companies. And all these three Nifty constituents, BPCL, or be it HPCL or IOC, have been maintaining their gains. BPCL, HPCL have been trading with gains of between 4 to 5%. And IOC is also one of the top gainers on Nifty, higher by 2%. Rahul, on the charts, if you were to take a long position on any of these three counters, which one would you choose?
I would take a bet on two, HPCL and BPCL, because what we have seen, the stock were under pressure for a very long period of time. Indian Oil Corporation has already seen a sharp rally in the last 3 days. Some more upside is seen in HPCL and BPCL. So definitely any correction, maybe 2-3% downside on maybe a couple of days of cool off. If there is a profit booking, one should buy. On the upside, BPCL can test the levels of maybe 485, 490. So definitely some sort of upside is there. Looking at the nature of the deep portal setup of both the stocks, so I would bet for both the stocks, HPCL and BPCL.
Okay, so one can look to go long on both BPCL and HPCL on the charts, according to Rahul. But let's bring in our next guest. Avinash Gorakshakar, Head of Research at Joindre Capital Services, joins us right now, right here in the studio, actually. Hi, Avinash. Good afternoon. What's this nervousness that's there in the market? Throughout the day, we were trading in the green. There was a sudden blip around 2 p.m. Is it some nervousness ahead of the BIPOL result tomorrow?
I don't think so, Navneet, but my guess is today's surprise has been the PSU banks. I think the kind of rise we have seen in most of the PSU banking stocks looks a bit surprising, and I think how sustainable it is, it's going to be very important, because yesterday PSU banks were down. Today most of the PSU banks are up, and quite significantly. So my sense is, I think probably the markets are looking at some sort of good announcement in terms of the PSU banks. Otherwise, if nothing of this sort comes in, you could possibly see a sell-off in these banks maybe tomorrow. But overall, I think the markets have made a reasonable kind of performance, considering that 10,400 level has been defended, and it's going to be a stock specific approach. My sense is, I think going forward a little ahead, 10,450, I think the markets would consolidate, and maybe the kind of incremental upsides which we saw after yesterday's big rally, it's going to be a bit difficult for the markets to sustain this kind of rise on a sustainable basis. So I think it's going to be stock specific, and more or less, as long as the PSU banks continue to go up, I think you're going to see a lot of these speculative moves coming in here, provided there's some news flow to defend it.
You're saying there could be some news which is expected in the PSU banking space, hence the rise in today's.
I think there's nothing more, Navneet.
What else are they going to announce? Recap is done.
Yeah, but I think probably maybe because PNB has given 4 quarters to write off the loan, only PNB takes the hit. So to that extent, the other banks are not in the net. I mean, earlier there was a expectation that possibly that loss could be covered across most of the PSU banks. So I would believe that yes, some amount of positive surprise could have come because of this factor, because today morning, I believe, having read the news flows, that PNB has decided to take the entire hit on its books. So that actually leaves the other banks, quite independent of this fraud.
Okay, pull up Uttam Sugar Mills. Remember, the sugar stocks last week were quite weak, and yesterday we did see a bit of recovery, but just in the last 2 to 3 minutes of trade, Uttam Sugar is now trading with gains of 18 to 19%, and the upper circuit limit is around 20%. Let's do a check for the other stocks. Sakti Sugar is also trading with gains of 2.5%. Pull up Balrampur Chini, that's the most liquid one, as it's there in the futures and options market as well. Balrampur Chini too trades with gains of 2.5%, but the stock which is in focus is Uttam Sugar. Amar, on the charts, anything on Uttam Sugars?
Yeah, looking at this particular counter, what we are seeing is that it is definitely in an overall downtrend. Because if you look at the medium-term charts as well as the short-term charts, they continue to be in downtrend. But what is happening is that it's been in an extremely oversold condition, both on the weekly charts as well as the daily charts. So somewhere or the other, there was this pullback had to happen. Now, if you look at it on a long-term chart, somewhere around 80 was a crucial support level. So from there only the stock has bounced back. But on the upside towards 114, 115, that should act as a immediate resistance for this stock, where it could witness some profit booking coming in the stock.
Well, sugar, interesting. I mean, Uttam Sugar notwithstanding, it's just a fairly difficult trading play to bet on right now, to be honest. So difficult to call whether or not these stocks will continue to rise and shine. In fact, I was just looking at the sugar prices after that initial move which the government did, wherein they eased the stock limits, etc., and the sugar prices went up all the way to 3,200. They've come back to sub 3,000. So the Indian domestic sugar prices too have come off. And in times of a sugarcane glut, Avinash, is there merit in being a braveheart and trying and buying into these names fundamentally?
No, I don't think so. I think clearly...
I mean, you may think so. I'm just wondering.
No, I think we have anyway not recommended most of the sugar stocks to our clients, Neeraj. And I think clearly the point which you made is very valid, that in case, this crop is going to be a huge supply driven crop, then I think you're going to see sugar prices further melting down. And I think clearly, these kind of moves probably don't justify the logical reason as of now, at least. I think at least over the next, say, a couple of quarters, sugar prices the way they are and the kind of expectations that they might come off, I think clearly indicates that there could be further selling pressure maybe once the, quarterly numbers are out.
Okay. What's your view on cement? We've been asking this to everybody because cement stocks have been showing these moves and strong moves at that.
I think clearly in specific pockets like South, I think cement prices would definitely move up. I think there's a decent amount of demand supply equation in the South. So I think companies like Ramco Industries or typically India Cements, which have a large exposure on the southern market, Neeraj, could possibly benefit more. And clearly looking at the fact that Ramco has been one of the efficient cement players, I would believe that any dip should be used as an opportunity to buy, because clearly my sense is, larger players like Ultratech clearly have gone in for the inorganic route, but Ramco has been one company which has actually built in capacity purely through the greenfield route. So I think to that extent Ramco could be considered.
Okay. Ramco Cement 736 and counting in the session today. 312. Stay on, Jamin. Lots more to talk about, but a couple of editorial pieces now. Firstly, let's get in, Navneet, to talk about what stocks could enter into or get out of the F&O ban. Yesterday, the list was fairly long. Today, not so much, Navneet.
Yeah, we mentioned Andhra Bank, BEML and Steel Authority yesterday. So among those three, Andhra Bank and BEML did enter into the F&O ban in today's session, but Steel Authority was the one which just missed the percentage figure. If you could just pull up what it was yesterday as a percentage of market-wide position limit. So 93.3, remember, for a stock to enter into the F&O ban, it has to breach the 95% mark. And if you look at today's session, the March futures of Steel Authority have seen a bit of OI addition. So if towards the end of the session, if it breaches the 95% mark, probably the stock could enter into the F&O ban for tomorrow's trade. But I just want to pull up one more F&O counter, and that's Chennai Petroleum. That's just gone up in the last 5 to 10 minutes of trade as we speak. The volumes in the cash side have been pretty high, so underlying is up nearly 5 to 5.5%. Let's just pull up the other plate. This is the March futures. No major action is seen on the futures side because the OI is still about flattish. No major OI addition has has been seen, but the volumes in the cash side has been higher. Rahul, quickly on the charts, 5.5% higher for Chennai Petroleum and higher volumes. Almost 10 lakh shares have been traded there.
Yeah, the stock has been into a deep oversold territory, and today the move which we have seen is considered as a technical pullback, and this could be extended to the levels of 385. So definitely any cool-off should be used to buy with a stop loss of 340. Short to medium term, 380 to 385 could be seen in the coming days.
Okay, in moments from now, we'll get in what dealing rooms are recommending in the session today as well. Darshan should be joining us any moment to talk about those. As we speak, the OMCs rule the roost. Bharti Infratel about 2.5 or 3% higher. Axis Bank has some gains, so about 2.19% higher for Axis Bank as well. And Wipro amongst the IT names that is standing out today. Clearly, when TCS falls down 6% and Wipro is up 2%, it will stand out as a stock that you should monitor in this session. So watch out for Wipro individually. We don't normally talk about Wipro as a trading stock. Amar Singh, any thoughts on Wipro?
Yeah, looking at Wipro, what we are seeing is that the long-term trend for Wipro, and apart from that, for other major IT stocks, they continue to be strong. So any pullback should be used as a buying opportunity. And also what we are witnessing on the short-term daily charts, that there is some bullish pattern formation on the daily chart. So clearly reflecting that Wipro has got extremely strong support somewhere in the region of 280, 85. Currently it's around 296 levels. So yes, it can be a buying opportunity, because even on the weekly charts, it's in oversold territory. So clearly reflecting that the downside seems to be limited. Whereas on the upside, once it consistently trades above 295, 98 levels, then it's headed higher towards 315, 320 levels.
Okay, that's the view coming in on Wipro. In fact, the activist hedge fund investor Elliott Management had acquired just a tiny bit stake in Wipro's EDR or something I was reading. Remember, it's the same hedge fund which has stake in Cognizant and literally forced the company to declare some bit of buyback and also some change in their board constitution. But it's time to get a check from the dealing room, and Darshan Mehta joins us with his channel checks. Darshan, over to you.
Well, hi Navneet. One of the stocks that's been actively spoken about is PC Jewelers. Did manage to hit an upper circuit today, but has managed to cool off. Dealers indicate that some of the Mumbai-based HNIs are actively accumulating PC Jewelers. So this is one of the stocks that's been spoken about. One of the domestic mutual funds is actively accumulating Sundaram Finance. Stock is trading at a fresh 52-week high in today's trade. And some of the NBFCs, especially the likes of M&M Financial, are being spoken about. For M&M Financial, there's a buzz of a potential corporate announcement also that could come in. The counter is up almost 3%. So, but overall on the Nifty, still, there is a lot of caution among dealing rooms. So it's becoming very, very stock specific.
We'll watch out for each of these. M&M Financial, interesting move. There's Rahul. You looked at M&M Financial. We don't normally see this being top of the trading pile as compared to others. In fact, this morning, all our technical experts were talking about Bharat Financial as being the stock to monitor. Have you looked at either of these two names?
Yeah, definitely. As you said, that Bharat Financial has already rallied, but Mahindra & Mahindra Finance is taking an attempt to see some support at the lower levels. Stock has been under pressure for quite some time, but looking at the setup, I feel that there has been shadows on the daily charts, so that has indicated that strong support has been seen. So in the coming sessions, we could see stock testing the levels of maybe 450 and then 460. But there has been multiple resistance. So the stock will move slowly and gradually. But definitely maybe around 415 one should buy with a stop loss of 400 for the target of 455 to 460 in short to medium term.
If you are long Bharat Financial, Rahul, would you take money off the table?
No, definitely one should not take profits because the momentum is positive. But looking at the setup, Bharat Financial has where we have seen a sharp correction in the last couple of weeks. Bharat Financial has managed to hold on the grounds. So any maybe cool of maybe 3-4% should be used to buy. It is a slow and gradual mover in the recent times what we have seen. But definitely on the upside, 1150 could be seen in the next one or two months. Maybe 1020, 1010 should be the ideal level to enter, and one should place a stop loss below 990 for a positional target of 1150 on the upside.
Okay, it's 320. Almost the time of the show wherein we should take in closing strategies. Then I'll ask Avinash for a fundamental idea as well. But firstly, the closing strategies. Amar Singh, to you first. Your top closing strategy today?
Yeah, I would say that I would recommend Tata Motors. What we are seeing in Tata Motors is that this stock was really beaten down and significantly, but it has taken support, and also there is a possibility of a pullback. So Tata Motors, any pullback towards 346, 47, that can be used as a buying opportunity with a stop loss of 338 and a target of 365 in the short term.
Okay. Rahul, you?
Yeah, on the index I have a buy call in Nifty. A short to medium term target, as we discussed earlier, 10,555 is the target, upside target, which is an island reversal gap area. One should place a stop loss below 10,330. On stock specific front, I have a buy call in NCC. The stock, after the 3 days of consolidation, stock has seen some sort of a revival in the trend. So definitely from current levels, stock can test the levels of 135. One can trade with a stop loss of 116 for a target of 134.35. My second buy call is Indiabull Real Estate. Slowly and gradually, last couple of days, stock is inching up. The momentum is not picking up, but definitely in the coming days, I feel that stock can inch up to the levels of 225, 230. So one can buy at current levels with a positional stop loss of 190 for a target of 225, 227 on the upside.
Okay, so these are the trading strategies from both our experts, but what about the fundamental pick? Avinash, what have you chosen for the day?
No, in fact, Navneet, we have looked at a company called IOL Chemicals and Pharmaceuticals. Now, this company is largely into, ibuprofen, which is a well-established kind of, pain drug, and actually it's a large player. It controls about 17% global market share, and it has a complete backward integrated facility. So margins definitely are good. In fact, the plus point in the last 12 to 15 months has been that ibuprofen prices have actually moved up by about 20 to 25%, and that has got reflected in good financials for this company. In fact, they had a good turnaround last year. They reported a top line of close to 700 odd crores and a EBITDA of almost 102 crores. So this was a big improvement compared to the last year, and they ended with a bottom line of close to 5 crores compared to a loss of 40 crores in FY16. The interesting part is in FY18, they've already recorded a top line of 700 crores. EBITDA of almost 87 crores, and the bottom line has multiplied by almost 5 times. If you compare the first 9 months, it's total about 16 crores. So our sense is that with capacity increasing now post April and prices continuing to remain firm, our sense is that you could see an earnings of close to about 4 to 4.5 rupees for FY18, and probably FY19 we could see a double digit kind of earnings improvement around 9 to 10 rupees. So for a company which is going to show a top line of close to about 1100 crores over the next say 12-15 months, you see a company which has a market cap of just close to about 400 odd crores. So clearly in terms of the EBITDA margin, operating leverage and the pricing which has happened in the last 6 to 12 months, we believe that there could be a case of re-rating here, and valuations don't look to be very expensive. I think they trade about 7 to 8 times FY19. So clearly in that perspective, I think the only negative for this company is it's got a large debt on the balance sheet, which hopefully the management wants to actually reduce over the next 12 to 18 months.
You said 17% global share. Sorry, Neeraj. Do they export?
Yeah, they have a large export share. They have clients like Sanofi.
So no pricing pressure there.
In fact, last 6 to 12 months, we did a ground check and we found that, ibuprofen prices had remained down for a long time. In fact, supply side pressures have actually continued. There's not many players who actually directly supply ibuprofen. Earlier, the market was very crowded, Navneet, but now it's become a 2 or 3 player market. So to that extent, the margins have already shown a good improvement in the first 9 months.
No, by the way, sorry, what was your FY19 net profit estimate, Avinash?
FY19 we could see a bottom line of close to about 55 crores.
55 crores.
This year it should be about 22 crores. They've done 9 months, they've done 16 crores. And if you see the performance in the third quarter, Neeraj, profits have moved up from almost 1.5 crores to 8 crores.
So from 22 crores, you expect the PAT to move up 150%.
I would be seeing a EBITDA of close to about 165 to 170 crores. This year they should end with a EBITDA of almost 135, 136.
And that's all on back of higher prices?
In fact, they have also implemented a program which will actually increase their install capacity for ibuprofen by about 25%. So that also gets, and they also have a specialty chemical business which accounts for 40% of their top line.
Okay. Wow. So 118 is your target. What's the time horizon?
We are looking at a time horizon of at least 12 to 18 months. Hopefully, market will start discounting FY19 post September, next September.
Okay. At some point of time, we'll try and get in touch with the management and try and figure out what their estimates are as well. These are strong growth estimates. If they turn out to be true, it should be great news for investors into IOL Chem. But that's the recommendation that is coming in from Joindre Capital, Avinash, Gorakshakar. Do watch out for those names. As we start wrapping up trade, or just before we wrap up trade, aside of TCS, the one sore spot today has to be Kotak Bank, which has only worsened as the day has gone by. Amar, on a day when banks haven't really done too badly, though you would argue that a clutch of private banks are down, but Kotak Bank has had a really, really sharp drop, 2% lower or almost 2% lower. What does one do here?
I would say that Kotak Bank, if you look at this particular stock, it's been in a range bound for almost 10 to 12 trading sessions, 1110 on the upside and 1070 on the downside. So it has not corrected also the way when we saw the indices correcting. So yes, today it is witnessing some correction, but I would say it's just part of a move. Overall, the long term as well as the intermediate term trend for Kotak Mahindra looks strong. Any pullback definitely can be used as a buying opportunity. Major support level for this stock is around 1030, 1040. That's a very strong support zone. Whereas on the upside, again, it's going to be capped around 1130, 1140. So it's going to trade in a range right now and doesn't seem that it's going to break out of the range in the short term.
Okay, that's the view coming in on Kotak Mahindra Bank, and that's one of your top losers on Nifty as we speak. And TCS obviously is the top loser there, down 5.5%. But let's head across to Neeraj to find out how exactly the closing today is panning out. And Neeraj, just about a flat closing for the day.
Well, as Navjot Singh Sidhu says, flat as a pancake, Navneet. It's just not, I mean, the headline numbers don't show any kind of a movement, though there has been some bit of volatility, you would have to say, as the intraday charts will anyway show. The broader end of the spectrum, which was actually doing much better for most part of the trading day today, and the mid caps and the small caps ending fairly strong. So it's a strong bout of outperformance by the mid caps and the small caps. Can't say the same for the large caps, which is that the market breadth has looked fairly exciting. What about individual names? Well, Sun Pharma, top gainer. Wipro, interestingly, are doing very well too. Dr. Reddy's, Bharti Airtel, it's an interesting set of names out there. And then the dichotomy between private banks. So ICICI and Yes Bank doing very well. HDFC and Kotak Mahindra Bank not so. SBI in between, of course, squeezes in some gains as well. The sore spot has to be TCS, down about 5.5%, stays low in the day today. Maybe the fact that they upsized the size of the deal sale, the Tata Sons, leading to this. Kotak Bank about a couple of percentage points lower. M&M and Maruti are two stocks which have gone down. HDFC Bank about 0.5% as well. And then stocks like IndusInd Bank. So the clear dichotomy between what the private banks did in the session today. PSU banks, though, one-way move and on the upside, and I'm sure they feature in the list of stocks that Navneet is looking to highlight. I hope I'm correct, Navneet.
Yes, Neeraj, definitely they do. And a clear outperformance today from the broader markets, unlike yesterday where the benchmark indices registered strong gains. Let me start off with Jindal World, counter which was up 7% in yesterday's session, was locked in upper circuit with gains of 20% today. The other one is Future Consumer, which was building on gains after every 10 minutes in today's session. The reason for the gains today is that Motilal Oswal initiated its coverage with a buy rating on the counter. And not only Future Consumer, we did see the other Future Group company stocks like Future Market and also Future Enterprises going up. From the sugar pack, which was down in last week session, sudden recovery in the last half an hour. Uttam Sugar saw good gains, so Uttam Sugar also closing the day in the green. And from the paper pack, you had Star Paper, which saw a good amount of gains in today's trade. Neeraj highlighted the PSU banking space. Yes, it does feature in my list. Andhra Bank, Bank of Baroda, Bank of India, you name it, and all of these stocks were up and about in today's session. In fact, most of your F&O gainers, I guess 7 out of 10 top 10 F&O gainers were the PSU banking stocks for today's session. The other one which rose was PC Jewelers. That also reported, in fact, registered good amount of gains. On the flip side, Apollo Hospitals traded weak. I guess that saw losses of nearly 3%. JBF Industries, that was your top loser in the Nifty 500 index. And United Spirits, which went up 5% in yesterday's trade, saw some bit of profit booking coming by. So United Spirits was down nearly 1.5%, Neeraj.
Well, so all in all, a flat day of trade, but you would you would have to say that the broader end of the spectrum did extremely well, and that is actually fair. That brought in a fair bit of buoyancy as well. Just the while we've spoken about what's happened to individual movers, the contributors list should also come up on your screen. And then once you get the heat map up as a final figure to just show you what's happened there, that's the contributors list. But if you can get the heat map on just to show you how the eventual market breadth on the Nifty has been, and even Stevens. So not a bad close for the large caps as well, because we're closing even Stevens, but the mid cap end of the market and the small cap end of the market looking very, very buoyant. And this is now, I think the rates will just stop trading any moment now, and then we'll have the final picture. This is probably the moment, yes. Now the rates have stopped, and we have the oil marketing companies at the top of the pile. Sun Pharma gaining in some gains, and TCS and Kotak Bank being the sore spots. Let's get the contributors and the market breadth, and then the volumes as well on the screen. This is the contributors list, and as I said, a split between private banks. So Kotak and HDFC on the losing side, ICICI, Axis, even IndusInd on the gaining side. I think no, IndusInd was the loser as well. But TCS, had it not been for TCS, it would have been a fairly decent day for the large caps as well. But it's been a great day for the mid caps, as the advance decline ratio will show you. It converged a little bit towards close, but still opened up in the last half an hour of trade. So close to 1:2, or actually better than 2:1 in favor of the advances, which is not bad. And then the turnover as well coming up on the screen.
Cash turnover is really high today. I think that could be on back of TCS multiple block deals.
Ideally should be that, because this is just unusually high, right?
Yeah.
We now used to sub 30,000 or 30,000. 44 was something we had in February.
Yes, 42,000 is something which I remember seeing last in the month of February.
Yeah, so this is high, but yeah, this has to be specific bulk deals that would have happened. NSE F&O, marginally higher than what we've been used to off late, but yeah, still sub the normal option levels that we usually get on the bank Nifty weekly expiry session as well, but still fairly decent levels. Interesting to see, Navneet, that volatility hasn't crashed today. Throughout the trading day, even when the markets were up 0.5%, VIX stayed more or less stable.
Yeah, in fact, yesterday we were up 2%. VIX was just about stable. No major losses were seen. Today, India VIX, it was down 2 to 2.5% at one point of time, but it's just closing the day in the green. And higher volatility so far has been a concern. Majority of your analysts, they wait for India's VIX to go down to levels of 12 to 12.5. So until then, if it doesn't happen, if it happens, if India VIX slips to those levels, probably you could see a fresh breakout on the upside.
Yeah, I just want to just get in the global markets picture once before we take it back to our experts and just show you what the world markets are doing as we speak. So the European market should come up on your screen, and then the Dow futures. Well, a sprinkling of green, but largely flattish for the FTSE and the DAX for sure. And the US markets, the Dow futures will come up as well, just about flattish. So no alarm bells, if we can use that term. Anyways, final thoughts from all our experts, and Amar Singh, to you first. What would be your near-term approach for this week on trade tomorrow?
I would say that any pullback can be used as a buying opportunity, because Nifty has been displaying strength over the last couple of days. So what it effectively means is that any pullback towards 10,360, 70, that can be a buying opportunity with a stop loss below 10,330. And again, targeting 10,470, 480 on the upside, because till the time 10,470, 480 is not consistently taken out, it's not headed higher towards the next level of resistance around 10,530. So any pullback can be used as a buying opportunity, but one should book profits, and only a close above 10,530, 550 zone would mean that Nifty is higher towards 10,630 odd or so.
Rahul, what about you? What about your approach? Let's say if we have a gap up opening tomorrow.
Yeah, as we discussed earlier, that we have a buy call in Nifty as well, with a target of 10,555 in short to medium term. But as far as Bank Nifty is concerned, day after tomorrow is options expiry, and looking at the last 2 days of candle, the Bank Nifty has gaining strength, and which is supported by the PSU banks pullback or short covering. So definitely any 0.5% correction in Bank Nifty should be used as a buying opportunity. Stop loss should be placed below 24,550. Short to medium term target would be 25,150 around Nifty, Bank Nifty spot levels.
Avinash, closing thoughts from you?
No, I think the short-term momentum would continue. I think coming week, I think is the Fed meeting. So I think that would be the trigger point till the time we don't get any global news flows from the economy perspective, especially what kind of comments come from the new Fed chairman. So I think probably till that time the markets should be looking up, and I think clearly it would be stock specific now.
Okay, so stock specific could be the approach in the near term, as Avinash states. But on that note, I'd like to thank all our experts, Avinash, Rahul, as well as Amar. Thanks a lot for joining us today and taking us through your views. We'll slip into a short break. Don't go anywhere. We'll be back with more on the other side.
आइसक्रीम? ये है डबल आनंद। पहला आनंद पॉलिसी टर्म के अंत पर मैच्योरिटी क्लेम का पूरा भुगतान, और दूसरा आपके अपनों के लिए लाइफ कवर की पूरी रकम बिना किसी प्रीमियम के। LIC न्यू जीवन आनंद, आनंद ही आनंद।
सॉरी, आई एम लेट। क्या हुआ?
कुछ नहीं यार, जस्ट वर्किंग ऑन माई एक्सपेंशन प्लान।
फंडिंग का चक्कर।
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख। ला।
अरे।
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल।
हाँ।
NSE Merge, साथ हमारा, सफलता आपकी. The SME Growth platform from India's largest stock exchange.
On 26 November 1949, the Constitution of India was adopted, recognizing liberty, equality, and fraternity as the principles of life, which cannot be separated from each other. The government of Karnataka has imbibed the ethos of the Constitution by developing programs and policies aimed at creating a socially, economically, and politically just society. Karnataka's flagship programs such as Maitri, Annabhagya, and Arivu have created an equal opportunity platform for all, irrespective of their gender, economic, or social status. Karnataka is committed to encourage education through various welfare initiatives, ensuring equal status for women and empowering minorities to uphold every individual's dignity. In the last 4 years, Karnataka has formed 462 new Gram Panchayats, which has taken the principles of democracy to the grassroots levels, and our Progressive Vision 2025 document engages public government participation to build a better state for all. Karnataka's collective vision to endorse fraternity, justice, and equality has transformed into Karnataka's model of development, which is based on the tenets of the Constitution.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
Thanks for staying with us on Countdown on Bloomberg Quint. Now, we showed you how the European markets have started off with a slight positive bias, but let's head across to Sandra Killoff, who joins us right now from the London studios with what she's observing. Good morning to you, Sandra.
Good morning. Yes, so we're seeing European stocks climb this morning following a mixed session in Asia. That's as investors look ahead to the US inflation report due out later today. They're looking for clues, of course, on the pace of Federal Reserve policy tightening. The benchmark stock 600 rising for a seventh day here in Europe. That's its longest run since October, currently up 0.3%. Similarly, we're seeing the DAX up 0.2%, while the FTSE 100 is trading relatively flat here in London. Miners very much leading the way, however, across Europe. Antofagasta up more than 3% here in London. That's after announcing a bumper payout to shareholders. The London-listed company declaring a final dividend of 40.6 cents a share, bringing its total payout for 2017 to 50.9 cents. That's higher than analysts had expected. CEO Ivan Arriagada crediting higher copper prices and the firm's continuing cost management program. Now, in fixed income, Germany's 10-year yield has advanced less than a basis point to 0.625%, while 10-year gilt yields have gained less than 1 basis point to 1.49%. While in currencies, we're seeing the euro relatively unchanged, while sterling has slipped 0.2% to 1.3891 against the dollar. Now, that weaker pound comes ahead of Chancellor Philip Hammond delivering his first spring statement later today. That's the most interesting figure is likely to come from the Office for Budget Responsibility in the form of the Brexit divorce bill. The government has agreed to pay between 35 and 39 billion pounds, but the OBR's estimated cost could be as high as 75 billion or as little as 25 billion pounds, depending on the shape of the deal. So we'll get more on that at midday UK time.
Okay, Sandra, thank you so much for joining us and giving us that perspective. Sticking to global news, US President Donald Trump has issued an executive order blocking Broadcom from acquiring Qualcomm. The $117 billion deal has been scuttled in the name of national security. Bloomberg's Matt Larson reports.
There was a note out a week ago from CFIUS, the Committee on Foreign Investment in the U.S., that they were looking at potential security implications for the deal, and the president kind of front ran a lot of those talks and just flat out banned the deal. So it looks like it's over for Broadcom and Qualcomm.
Okay, and does it seem like this was a well thought out decision, or was it just a quick more of a hasty reaction to national security threats?
It's certainly a quick decision. There's not a whole lot of transparency as to what goes into CFIUS determinations. There were a lot of behind closed doors Security Council meetings. There's a big concern for investment in 5G. That's been an express priority of the Trump administration. And so, understandably, a swift decision on something that protects U.S. interests in 5G, I guess is understandable, but it's certainly a bit of a surprise to see this quick of a decision from the Trump administration.
Matt, real quickly, what's this all going to mean when it comes to the shareholder meeting and these board nominations and Broadcom trying to take seats on that board?
Yeah, I think shareholders were, in a way, looking forward to some discussion about the Broadcom bid because Qualcomm's technology licensing business has been struggling recently. Apple has been underpaying royalties to the tune of about $4 billion a year, and so there was certainly some interest in shifting away. So it kind of brings that dispute front and center.
And we may well be used to getting news of this nature over the course of the next few days, weeks as well. Multiple theories doing the rounds about the real reasons why Trump has blocked the Qualcomm takeover as well. While as the Bloomberg correspondent stated, it's a hurried decision taken on the back of on the perceived account of national security. But this is a large deal and a large bid that has been blocked, and certainly going to raise eyebrows across business circles. Who knows what is more in store? Twitter too is full of all of reactions that have come in from across the world on this move as well. So this is fairly interesting. Let's see what happens there. Meanwhile, just keep in mind, back in India, moving on to Indian businesses, back in India, we have one of the busiest weeks in the IPO market or the primary markets. 4 IPOs kick-starting this week. We've already seen the first one kick-start in the session today. And over the course of the next 3 days, we have 3 other IPOs coming out. Together, cumulatively, the company is raising close to 9,500 crore rupees. This is the largest that we've seen companies raise since October 2017. Tomorrow, and in the near term, we'll have the country's largest state-run defense manufacturer, Hindustan Aeronautics, which will be hitting the primary markets as well. The government, remember, looks to raise over 4,200 crores through this offer for sale. And this is another large ticket IPO in addition to Bandhan Bank. So we have 2 large IPOs bunched up now. And then a couple of fringe IPOs. By fringe, I mean slightly smaller IPOs. I think cumulatively about 9,500 crores is a fairly large sum. Sajid Mangat caught up with the management of Hindustan Aeronautics, though, to get a clearer picture of the company's financials. Listen in.
This revenue comprises basically of manufacturing and repair overall. In respect of manufacturing, the sales are recognized based on carrying out a delivery of aircrafts and acceptance by the customers, rather than setting up a sale based on percentage completion method. In the initial quarters, as well as the quarters of the previous year, the work in progress would be built up, and as and when the aircrafts are getting delivered, the revenue would recognize and the corresponding profit there along. The operating profit is normally in the range of 12%, which is in line with the profit policy of the government.
And what about the EBITDA margin? They will be in the range of 24%, which you had last year as well?
No, the EBITDA margins of last year, 24%, included one time due to finalization of prices. Excluding this, it would be in the region of 20%. And this has been around that it will be.
So the 20% is a normal margin range in your operations. Is that fair assumption?
That has been the practice in the past. It would be in the region of 20%.
Can you also take us through the dividend policy as well? Because you have been a good dividend payer, and also the buyback policy, because I read it in the thing that as soon as it crosses a net worth threshold, you do come out with a buyback of something. Will that be continuing once you go public as well?
The buyback as such, I'm not sure about the policy, but we had a buyback in 2016 where we had paid this buyback of 25% of equity amounting to 5,264 crores, including the tax thereon. We had another buyback during the current year 17-18. It was 7.5% of equity, 2 crores 71 lakhs 12,500 equity shares valued at 921 crores, apart from buyback tax of around 208 crores. So buyback is essentially a policy decision. With regard to dividend, there is a norm of government has given a norm, 30% profit after tax or 5% of net worth, whichever is higher. We are paying in excess of those guidelines. For the year 16-17, we have paid 800 crores. And for the current year 17-18, for 17-18, we have also paid 800 crores.
So that policy remains as percentage of profit or percentage operating profit will remain going forward as well?
Yeah. The policy has not been changed. It is still continues to remain at 30% of profit after tax or 5% of the net worth, which is the minimum dividend payable by profit-making CPSEs.
Before I go to Mr. Mazhar, I just want to check with you on the breakup of your revenues as well. You spoke mostly from manufacturing sales and then MRO sales, which comes in there. Are you going to see a change in that mix going forward? Maybe not now, but maybe 2 to 3 years down the line when MRO will be much more in nature for you?
If you see the previous years, earlier years' performance, the repair overall activity has been increasing. For financial year 14-15, it was in the region of 21%, which has increased to 31% in 16-17. So the activity of repair overall would continue to increase in the days to come.
Mr. Mazhar Ali, this idea of what is the kind of order book you have, and can you just break it up for us in terms of which area it is?
The current order book comprises of Su-30 aircraft, LCA, ALH helicopters, Dornier 228 aircraft. In the total order book, there is an element of repair and overhaul which continues year after year. In the current order book, it is 1 year's repair and overhaul task for the company.
And the biggest worry for some of the investors would be your major revenue comes from SU30 MKI. That's 2.5 years of production line which you have, and after that you said the repair would be there. Will that be able to compensate for the manufacturing sales that happen?
That coupled with the enhanced LCA production would compensate for the Su30 manufacturing which is coming to close. That is the Su30 overall which would increase, and the LCA manufacturing which would pick up will compensate for the Su30 manufacturing which is coming to a close.
And just to get your feedback on it, you spoke about cost efficiencies and to get much better margins in. What kind of cost rationalization are you undertaking within the group to ensure that you have better margins and efficiency?
In so far as labor productivity is concerned, one thing I can tell you, being director HR also, labor productivity is concerned, we have very clear. There are two things which we have taken. One is based on the dynamic workload scenario which we are faced with now. We have not been inducting regular manpower. Based on our requirement only, we take on tenure basis. That is one step which we have taken so that our manpower get right sized. Number one. In so our individual labor efficiency also, we have taken number of steps in the organization, wherein labor efficiency will be much better. In fact, one is increased outsourcing, other is enhancing labor productivity per se through system and through various mechanisms which enhances labor productivity. These are steps which we have taken.
And what kind of contribution will that have on your bottom line?
I think Ramana.
No. I mean, we have been continuously embarking on all these various cost reduction measures, including both as whatever CMD has told on the labor productivity, but not only on labor, but also on the material portion, where we enter into LTBAs with the suppliers. And all these over the last 4-5 years, if you had seen, it has gone up from our material content, which was some 57%, it has come down to 52% now. And our operating profit margin, which was in the range of around 8%, it has gone up to around 12 to 13% now. So this 4% increase in the operating margin is basically on account of the various measures which has been taken over the last 4 years, and we are also confident that in the days to come we will continue to do these things so that we will improve our operating profit margin.
What about CapEx plan for you? Because Mr. Ali spoke about doubling the line for LCA. There are other expansion plans which you have. So what is the kind of CapEx plan you have for HAL?
On an average, we are incurring about capital expenditure around 1,300 crores for the current year. Previous years was around 1,500 crores. And our target for next year also, the capital plan is around 1,375 crores.
And that would continue as a whole, the capex plan of around 13 to 1,500 crores per year?
It would be in that order.
And what about the R&D expenses? Because that's 6.9% of your revenues, which is coming in. Do you plan to maintain the R&D expenses at that level?
R&D expenditure would be around 7% of sales. We would try to maintain around that.
All right, that's the management of Hindustan Aeronautics. The IPO will be hitting the markets this week. But moving on, HDFC board today has approved a proposal to sell 4% stake in its AMC arm via the proposed IPO. Shraddha Bapla joins in with more details. Shraddha, over to you.
Well, back on 30th November 2017, the board of HDFC had approved an IPO of HDFC AMC by offering shares to the public in one or more tranches. So HDFC, as of 30th September 2017, holds about 57.36% stake in HDFC AMC. That time, the board has also said that post the dilution in that will be in one or more tranches, HDFC Limited and Standard Life Investments, they will continue to hold at least 50.01% stake and 24.99% stake respectively in the asset management company. So today, the board has approved selling 4.08% stake. HDFC board has approved selling 4.08% stake via an IPO. And Ketki Mistry spoke to Bloomberg Quint earlier and said that Standard Life will also sell their 8% stake via the IPO. Listen in to what he had to say with respect to the expected timelines for the IPO.
Today we had a meeting of our committee of directors. And the committee has recommended or has said that we can sell just 4% shares in HDFC Asset Management, which would be offered to the public once the AMC files this offering document, which we should do soon. They will also be selling some stake in the IPO.
Okay.
The total amount that we are selling will be about 12%. So we will sell about 4 and they will sell about 8.
All right, Bank of India gains the most in over 5 months after the lender said it has recovered 7,000 crore as dues from other lenders. Well, in conversation with Bloomberg Quint earlier today, Dinabandhu Mohapatra, MD and CEO of the bank, said they expect another 2,000 crore rupees to be recovered, which will reduce GNPAs by 3%. Listen in.
In last quarter, when it published the result, I told that no, all these exposure to banks through SBLC will be recovering the entire amount. And I'm happy to share with you that in the meantime, we have already recovered 7,000 crores. And the rest also, we have already issued the notices. In the maybe quick time, we'll also recover the rest amount.
Okay. Just repeat myself. How much do you think this is going to reduce your gross NPA by, sir?
Definitely, it will reduce around 3%, more than 3% maybe. It will be reducing because other recoveries also will be there. Let us hope for the best. Rest another 2,000 also I'm expecting to recover. Once it happens, then we'll be arriving at the number.
Mr. Mohapatra, this is Vishwanath here. You know, recalling all the recent instances with respect to LOUs and other non-funded exposure, and now your action wherein you've recovered all of this money, do you think that somewhere in the market there is sort of a fear that this non-funded exposure or any letters that are given out by banks, probably banks will be far more cautious in giving out that money, and other banks will try and recover whatever they are owed at this point?
No, that's not the right approach. It's not actually non-fund-based limit is a part of the business assessment, and it's not happening today. It's happening since banking started. It's a business model. It's a requirement of the business people. So it's not the issue with the non-fund-based limit. No, if you see the fund-based limits also recently, many accounts have become NPA.
Okay.
And when they are referred to NCLT, there is good recovery now happening. So it's multiple factors affect the entire arrangement. For example, economic and external factors, internal factors, all those things are involved. So SPLC is a model, is a product, quite running for centuries. And it's an approved product, so no issue on that. If you remember when it was declared, because of that, as per RBI inspection, around 9,500 crores, referring to, about 9,500 crores against SBLC, declared NPA. That time also I was very confident and told everybody that nothing to worry, it's all exposure to bank, and we are quite hopeful that it will be recovered after the notice period is over. Now you see within 2 months' time, we have recovered 7,000 crores. So product is not bad. So sometimes some issues come up, but you have to handle it. And whatever learning you get, then you have to accordingly improve the system and procedures.
All right, with that, it's a wrap on this edition of Countdown. Thanks a lot for watching the show, and stay tuned to Bloomberg Quint, as coming up next is What Did You Miss?